Lots to watch out for in terms of Wall Street. You had the big FOMC rate outcome coming in for us last night. It was looking rather mixed if you take a look at Wall Street, but largely it was negative. And US stock futures rose last night as well when Wall Street digested recent quarterly results from a slew of mega cap tech companies. Investors are also coming off a losing session after the Fed Reserve held steady on its rates. Now, when we talk about these tech companies, these are the likes of Meta, Tesla, Microsoft, IBM. We'll be taking you through their earnings and telling you how their stock has performed in yesterday's trade in detail just in a short while from here. But other than these names, also the magnificent 7 names are set to report in the coming days, with Apple's results being due for a Thursday release. You have Amazon also that will soon follow suit as the mega cap tech company reports its earnings next week. Now, if you take a look at what the intraday moves were like on Wall Street, on Wednesday, all 3 major averages ended the session lower as a 4% decline in Nvidia weighed on the entire market. Now, this decline comes after the Fed paused its interest rate cutting campaign, leaving its borrowing rate unchanged. We'll be telling you more about this later as well. In their post-meeting statement, policymakers noted that inflation remains somewhat elevated. So on the back of that, you had Dow Jones trading with a cut of 0.3%. S&P 500 almost 0.5% cut coming in. Nasdaq also 0.5% cut, a 100-point cut coming in on Nasdaq in yesterday's trading session. If you take a look at what's expected from the US market today on the economic data front, the 4th quarter GDP reading is due and weekly jobless claims are out in the morning as well. Investors will also be looking ahead to Friday's personal consumption expenditure price index report for December. Remember, this is the Fed's preferred gauge to understand what the inflation level is like in the economy. So lots to watch out for when it comes to the US markets. But well, yes, the tech earnings on one side and the FOMC outcome on the other side were the 2 big triggers for the US market last evening.
Well, absolutely. And with that, let's also take a very quick look at what oil and gold then were doing. Firstly, when you take a look at oil prices, it's been a bumpy ride as far as oil is concerned for 2025. A continuation of that is something that we saw coming in. You do have the US benchmark that settled at its lowest year to date after domestic crude stockpiles then in the world's top petroleum producer and consumer rose more than expected last week. That was an important data set that we had been watching out for. So the impact of that was very clearly visible on prices. When you take a look at Brent crude, settled down 91 cents or 1.2%. $76 per barrel is the kind of level that you're looking at as far as Brent is concerned. Even when you take a look at US WTI, then that is also the one that fell 1.6%. $72 per barrel is the level that you're seeing lowest settlement price so far this year, like I mentioned. And you did have crude oil stockpiles. That is something that we'd been watching out for. 3.46 million barrels last week was the kind of uptick that you saw coming in as far as that data was concerned, according to the EIA. And let's also take a look at gold prices because they also slipped on the back of the dollar and yields also rising. So that is something that we were looking at in terms of gold. 0.4% downtick is what you're seeing. So that largely is the kind of handover that we have coming in, a weak one for oil as well as gold, Sneha.
Absolutely, lots happening.
If you like this video, then like, share and subscribe to ET Now.